Hi, guys. I hope everyone's had a great weekend. Today, I'm going to touch on loan modification and what that can look like. In the past, we've talked about and educated a little bit on forbearance, mortgage forbearance, which we've gone into the details of what it can look like, the effects it can have, how it can limit you in different ways, and how it can help in other ways. Today, I want to touch on loan modification or mortgage modification, and it's going to look different depending on if what type of loan you have, who it's with, if it's with Fannie Mae, Freddie Mac, a local lender. Everyone is going to have different caveats in some situations. That being said, it may be a better approach for you than mortgage forbearance if you're looking for relief in some capacity during these times. So, loan modification, just to break down and summarize it briefly, is discussing with your loan provider the terms of your loan, whether it's the length of time, the interest rate, the monthly payment, basically modifying one or more of those terms. Now, there are different steps. However, with COVID-19, in the past, it has been very, very difficult to navigate these steps, and it's still not necessarily easy. But due to recent legislation as a result of COVID-19, it's the legislation has really streamlined a lot of the process, especially for federally backed mortgages such as Fannie Mae or Freddie Mac. So there's a much more simplified way to go about it. What the first step would be is to find out if you are eligible. Now, eligibility right now is much easier than it has been in the past. The times to really look at this are going to be if you're going to fall behind on mortgage payments coming up soon, or if you have fallen behind on mortgage payments in the last few months. That's one of the qualifications. Another one, because of the COVID-19 situation in general, a lot of people are coming up to a place in their employment where they're finding that they are not going to be able to return to work anytime soon. So a lot of people have had savings. They've been able to get through up until this point with the expectation of ideally returning back to work. Some people have even had return to work dates that have either been pushed out or very recently been retracted because of everything that's happening and because of where businesses are at. So during this time, a lot of our clients, a lot of our friends and family, a lot of people we know are getting to a point, a new development in their employment situation where they're finding that they're not going to be returning to work. And that's where these loan modifications could be a huge benefit. So, unlike mortgage forbearance, you're not just putting off the payment until later, which, as we've talked about previously, can really affect what picture that paints on your credit report. It's not, pushing it off to later. You don't owe it now, but you owe it down the road, and accruing that interest and those payments. This is you're making payments, you're just adjusting what those payments may be for what you can reasonably afford right now. So to read to you what this is the Freddie Mac website and what it states, and we're going to include these links in this email so that you know what your options are, what the breakdown is, and if you do choose to pursue it, please reach out if you need any help with it, because we have guided clients and friends and family through this process, and it can be such a blessing in different situations during this time. And we are here to help you, just assist you through that process. It doesn't charge, there's no charge or cost you anything. That's what we're here for. But to read to you what the website says so that you can gain a better understanding, you basically reach an agreement between you and your mortgage company to change the original terms of your mortgage, such as payment amount, length of the loan, interest rate, etc. In most cases, when your mortgage is modified, you can reduce your monthly payment to a more affordable amount, which is really what a lot of people are striving for right now. It may be an option if you're ineligible to refinance. So let's say because of the fact that you're out of work, that could affect your ability to refinance if the bank doesn't see you're actively employed. So if you're unable to refinance for a situation like that, if you're facing a long-term hardship, which again, lack of employment would be one of those things, you'd fall into both of those categories. And if, again, you're several months behind on your mortgage payments or likely to fall behind soon. So that's a brief overview of a loan modification. And again, these are also eligible for student loans. So you can reach out when it comes to student loans and have that conversation with your provider. But this is something that's out there that is readily available that may be, again, a better fit than mortgage forbearance if you can still make payments, if you still have the resources to make the payments, but you just need a reduced rate, and it has far less long-term repercussions than something like deferment or forbearance, where you're just not making the payments at all. I hope that helps. Like I said, we'll include both the Freddie Mac and the Fannie Mae resources below. And if you have any questions, or again, if you need guidance through this process, please reach out to us. That is what we're here for, and we would love to be able to help. We'll talk to you soon, and I hope everyone has a great week.